safe, have a bright Diwali and spend quality time with your family and friends. So here's wishing you and your family a very happy Diwali from myself, Cheryl D'Souza, and the entire ET Now family.
Good morning, and you're watching Buy Now Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Very good morning to you, Cheryl. And what are the markets doing now? Doesn't seem like that great of a morning coming in, but still resilient compared to the global markets?
Absolutely, Vinny. Also the fact that we've kind of got this whiff yesterday itself because we ended off the day's highest point. Nevertheless, we managed to log in 4th consecutive session of gains. But today, yes, somber moves coming in on the markets. But like Vinny said, not as bad as the rest of the globe. For now, we are actually trying to inch towards the day's highest point. Let's take a look at what Nifty Bank is doing. That's the one that's seeing more pressure. Almost 1% downtick coming in for the Nifty Bank. A list of losers, definitely it is the banking space that's ruling the charts as well. IndusInd Bank is a top Nifty loser, down about 1% after its earnings. You have Titan that's down 1.5%. Even SBI is down over 1%. Coal India, NTPC, all of them down in trade. Talking about the gainers, you have UPL, Nestle as well as Cipla that are actually ruling the charts. You have HCL Tech as well that is seeing good amount of strength in today's trading session. Let me talk about the sectoral indices. And PSU Bank Index has fallen for a second consecutive trading session. Remember that at one point in time, it was outperforming the benchmark indices. Yesterday, it snapped its 3-day gaining streak. Today is the second day of losses logged in by PSU Bank Index, down about 1.5%, top sectoral loser in trade today. Apart from that, we have the realty sector that's down about 0.8%. You have mid-cap index also that is underperforming the benchmark indices. Auto index also is down in trade. If you look at the flip side, it's the IT sector that is still bucking the trend. You have FMCG also that is in the positive territory. Like if you could term it, the defenses are holding ground in today's trading session. But Vinny, we are continuing the journey of sharing top Diwali ideas from our experts for our viewers.
Absolutely. Let's keep it going then with all the festivities and all the stocks that will be coming in for you all through this week. Let's bring on board Kunal Bothra as well as Vikas Sethi with us, and good morning to both of you all as well. Kunal, I'm going to first come to you. Obviously, let's continue the journey of the stock picks, and which are the 2 picks that you would be giving today then?
Good morning, very good morning, Cheryl and everyone, as well as Vikas. So 2 buy calls which I would want to suggest. The first one is apparently a buy on Maruti. Now, from the auto stocks, this is one name which is coming back towards some sort of a momentum for itself. The stock is finding a good base at this 8,300, 400 levels. We've seen multiple corrections, bottom to at these kind of support points for Maruti. So that could probably bring in a case that you might see the stock, rising up higher, or at least getting back into the thick of rally once the auto stocks manage to rise up again. 9,750 could be a target range potentially for Maruti in that kind of a time frame. 8,300, which I marked as a strong support zone, that could be a stop loss for this trade. And the second stock would be from the mid cap end. It's about SBI Cards. Now it's interesting because the last 3 months the stock has actually corrected from I think 950, 980 levels towards 870, 880 where it's currently trading right now. But the price patterns for SBI Cards is very bullish on the medium to long term basis. So would expect that possibly in the next 3 to 6 months the stock could see a strong movement on the upside. 1100 could be a potential target range for SBI Cards from current levels, and stop loss for this trade could be 777.
All right, so those are the top Diwali ideas coming in from Kunal. And Kunal, yes, one more day is left for you to give those top picks. I hope you have those lists also ready for you. And good morning to you. Good morning to you as well, Vikas. And good to have you on the show. And what are your top picks for our viewers, which they can look at in the new Samvat?
Yeah, good morning, Cheryl. Good morning, Vinny. And good morning, Kunal. And at the outset, wish you all a very happy and prosperous Diwali, and wish the same to all the viewers of ET Now too. As far as my Diwali picks are concerned, I've chosen 2 mid-cap ideas. The first stock which I like at the current levels is Poonawalla Fincorp. Fundamentally a great company, a very strong company. It used to be earlier known as Magma Fincorp. and this was later acquired by Mr. Adar Poonawalla of the Serum Institute fame. And ever since then, the company has shown tremendous growth. It's a very strong NBFC. The management is very aggressive, and they're nowadays focusing on retail, where you see very less NPAs and tremendous growth. And ever since the new management has taken over this company, their cost of funds have come down from levels of close to 9% to 6%. Their capital adequacy ratio is at 40%. And I see tremendous opportunity for this company going ahead. So I remain bullish on this. And the June quarter was excellent. And coincidentally, their this September quarter results are due tomorrow. And I'm expecting very good set of numbers looking at the updates which they've recently given. So I'm bullish on this stock, and I would advise investors to be buying into this stock at the current levels with a target of 450 rupees in about a year's time. The second stock which I like is again a company which I have been liking since quite some time from lower levels. The name of the stock is Praj Industries. This company is a leader in setting up ethanol projects, and I think with the kind of demand which we would witness for ethanol, with the focus of the government and their aggressive targets of 20% blending by 2025, which would mean the current requirement of ethanol, which is at 450 crore liters, would go up to as high as 1250 crore liters by 2025. And if that were to happen, then new capacities would have to be created, and I'm expecting around 12,000 crore rupees of investment in setting up new capacities for ethanol. And this company has a dominant 65% market share in setting up ethanol projects. So there is a great opportunity for this company going ahead. You can expect 8 to 9,000 crore worth of orders in the next, say, 2 to 3 years. So that is one part. And secondly, they're also into other kind of projects which they do for environment-friendly energy like biofuel, biogas. And they've also been able to set up 2G technology-based ethanol projects, whereby parali, which is a big concern in North India, the rice straw, the paddy straw, they can convert that into ethanol. And they've set up a plant for IOC in Bhatinda recently. So that would also present a very big opportunity. Fundamentals are great. The company has already come out with its September quarter results. The results were excellent. After that, we've seen some profit booking, and the stock has come to pretty reasonable levels. I think one should buy into the stock at the current levels with a target of 550 rupees in about a year's time.
Okay, those are the picks coming in from both Vikas as well as Kunal. Vikas likes Poonawalla FinCorp as well as Praj Industries, while Kunal does like Maruti as well as SBI Cards. So surely those are the picks coming in this festive season. There'll be more tomorrow, but on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with your stock related queries after the short break.
Hello and welcome.
Hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch markets at noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple
But
of
I
years ago.
always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी.
Once a trader, always a trader. Rakesh Jhunjhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on both?
Just clarify this entire case.
What is it going to mean for the business?
What else are you looking at?
It was clearly one of the biggest deals.
ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना दे.
Best part for me, I'm the youngest in my family. तो cover मिलता है, you get money, and I collect a lot of money. So I am very happy with collecting money all throughout Diwali, and I'm always up for Diwali. A happy Diwali to all our viewers. Hope you all have a dhamakedar, patakedar, tadafadi Diwali, and hope your portfolio does as well as the crackers that are bursting in the sky. So hope you have a great New Year as well.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And through this week, we have had a Diwali special episode where we've got you all the top ideas from our fundamental guests as well as technical guests on all the stocks that you can look at while making your portfolio for the news. Somewhat, but Vikas, one thing the retail investors also need to bear in mind is the fact that the markets are volatile. You have a lot of global factors that are at play at one point in time, and a lot of it's a very uncertain environment, be it the equity market, be it the FX market. But in this sort of a volatile situation, what should retail investors do to protect their wealth when in terms of equity markets?
Yeah, Sharil, it's a very good question. Lots of retail investors are really concerned about the huge volatility which the markets are witnessing. But as far as India is concerned, we are clearly in a very sweet spot. When you look around, everywhere there are lots of problems, and compared to them, we do not have so much of problems. And as and when things start looking up internationally, we would be certainly in a very good stride, and we would certainly see newer highs on our markets. So fundamentals look good. Our macroeconomic indicators are good. The crude, which used to be a concern for us, that has also come down significantly from 120 odd levels to the current levels of 90-95, though it remains volatile. So, and although rupee has been correcting, but it has performed very well against several other major currencies like GBP or the euro or the yen. So there's nothing much to worry as far as our markets are concerned, and I think investors should look for opportunities during this consolidation phase to buy into quality stocks and stay with them for at least a year or 2 years, and I'm sure they will make huge amounts of money from the current levels.
The key word is quality stocks. Buying quality stocks is important, is what Vikas is saying. But let's get started then with all your stock related queries. You can send us your queries on YouTube, Twitter, or our WhatsApp number as well. So get started and send us your queries, and we'll start with the query segment. Now, Kunal, firstly, I'm going to come to you. We have a query which is coming in from your namesake, that is a viewer called Kunal, who's from Mumbai as well. And he wants to know about Infosys December call option. 1,400 is what is written, and it's at around 125 is what they've bought it at. So is it the right time to quit this one, or should they continue to hold this?
So I'm not sure of the current market price for the call option, but I think it's a good bet to try and hold on to the stock. I think 117.18 is where the stock is, or the option is trading right now. My belief is that with the results out of the way for Infosys, HCL Tech, and TCS, I think, and the chart or the price reactions to the prices post the results, I think is quite bullish in nature for the stock. Now, it's also possible that these stocks may get into a very slow, steady and a gradual rally for themselves. So it's a good strategy which you've done, is that you've bought at the money options for Infosys, and you've gone through not the current series but 2 series ahead for the options. I would suggest to hold on to this trade. You can keep a stop loss which could be, I think, around 1365, 1370 mark on spot levels for Infosys. That would depend on the time decay for the option value. But if the stock moves up higher, then I believe possibly a 1465 to 1480 could be a near-term target range for Infosys.
All right. This one, talking about Infosys only, let me add on to this query then. This one is from Santi, and he's saying that he has Infosys 42 shares at a price of 1,415. He wants to know if there are any chance to fill the gap created post recent quarterly results on jump of stock price from 1,420 to 1,470 as per the technical charts. I'm a bit confused about the question though, Kunal, if you could decipher it.
So just to revise the levels, it was actually 1575, 1580 is what I was meaning for Infosys. On the question which the viewer has asked, I think post the results, the stock has opened with a gap up. Now, post the gap up, we expect that if the stock gets into a steady uptrend, then it could retrace a bit, come back, close the gap, fill the gap, at least partially or fully, and then start to move up higher. But what has actually happened for Infosys is that post the gap up, the stock has moved further higher. It's not come even closer to filling the gap partially. Forget about filling the gap fully for itself. That's a strong sign that this momentum is quite strong for Infosys. If you bought at levels of 1415, I would suggest to hold on and would place a very similar target, 1575, 1580 as a target for Infosys.
Okay. Because the next query we have is coming in from Ramesh. Ramesh, sorry, we missed your query in the last couple of days, but here you go. This one is coming in on two stocks, HEG as well as Repco Home Finance, Vikas. And Ramesh is holding 150 shares of HEG at 1,350 rupees per share, while 800 shares of Repco Home Finance at 258 rupees per share. Could you please advise how are the fundamentals looking like for these two stocks, and should they continue to hold this?
Yeah, Vinny, as far as HEG is concerned, this is one of the largest manufacturers of graphite electrodes, and the fortunes of this company and Graphite India, they're dependent on steel's demand, the production of steel by some method. I think it's the electric arc furnace method which uses graphite electrodes. The stocks, the HEG has come down from its recent highs and trades at reasonable levels. I think from the current levels, this can certainly see some upside or some good upside. And I think metals have been beaten down, and once dollar index corrects, which we expect it to, I think metals would start doing well and HEG would perform well. So I would maintain a hold on HEG at the current levels. And as far as Repco Home Finance is concerned, again, a quality company from the housing finance space. I'm bullish on the entire NBFCs and the housing finance space. We've seen LIC Housing and PNB Housing and Canfin Homes also doing well. So I think Repco Home also would continue to do well. So my advice to the investor would be to continue to hold on to Repco as well.
This query that I have has come from Twitter, Kunal, and the viewer actually wanted a view on Tata Investments, or the technical view on Tata Investments. How is this one looking at the charts? Even yesterday, actually, on YouTube, I had one of the viewers also ask about Tata Investments.
See, the very immediate charts for Tata Investments are a bit steep in nature. The reason why I'm calling it steep is because of the rally the stock had seen. I think the August lows, the stock was at 1400 levels, and then it rallied up to almost 2800. So doubling in a matter of 1.5 odd month in the month of August, and from there on the stock has consolidated. So what had happened is that the indicators had come back to a deep overbought territory for Tata Investment. That I believe could probably be an indication that maybe the stock may get into a bit of a cool-off mode. The only concern with such kind of stock is that these stocks, they have a tendency of cooling back to at least the 50 DMAs and falling even below that. So if you're looking for a better buy level, then I would suggest that maybe 2000, 2050 could be a good starting point, which could actually coincide with the 50-day moving average for the stock.
Okay, that's the view on Tata Investments. But I'm going to firstly thank all the viewers for sending us compliments either on YouTube or on WhatsApp as well. Cheryl, a lot of people are saying you're looking pretty as well, along with me. We both are looking quite pretty. So yes, thank you so much, viewers, for that, and festive greetings to all of you as well. And obviously this next query we have is coming in from Shubhashini from Chennai, and this one is for you, Vikas. They want to know about Samvardhana Motherson. They have 800 shares at 79 rupees. Should they continue to hold, sell, or look to average at the current market price for a long term?
Again, a good quality stock, but the stock has not been performing, and ever since the demerger happened, they've not been able to perform. But I think at the current levels, one should continue to hold on to the stock. This is a good quality stock, and over a longer period of time, I think we could see substantial upside from the current levels. So my advice to the investor would be to continue to hold.
This next one that I have is coming in from Maleshwar, and he wants to know whether he can buy IndusInd Bank and Deepak Nitrite at current price for the short term, Kunal. Either IndusInd Bank or Deepak Nitrite.
So I think both these charts are attractive. IndusInd Bank, I've been bullish on the stock, and I think post results, even if the stock is down some 4-5% at current levels, I think it could be a good zone where you can look to start buying at current zone. The only concern is that don't have a short term kind of a time horizon, because it's possible post the results that the stock may remain into a bit of a range on the downside for at least a couple of weeks before there could be any major kind of a price movement on the upside for the stock price. So that would be the only catch for IndusInd Bank. For Deepak Nitrite, on the other hand, I think it's a good price to buy the stock as well, because it's come back towards a breakout of a major resistance trend line. I think, if I'm not wrong, 2280 approximately is a huge resistance trend line for Deepak Nitrite. So if the stock manages to break past about these levels, it could be a strong, swift up move for the stock. So you can look to buy both of these names.
Okay. Because this next query we have is coming in, and this is on CDSL. The viewer is holding 75 shares of CDSL at 1,425 rupees and 200 shares of Crompton Consumers at 364. Should they continue to hold this or look to sell and buy stocks like Brigade Enterprise or Prestige Enterprise?
Yeah, Vinny, as far as CDSL is concerned, I've continued to remain bullish on the stock. I've recommended this stock quite a number of times from lower levels. It's a proxy to the retail investors' growth in our country. And with the kind of strong momentum which we are witnessing in the number of investors which are flocking into the markets, I think this stock would continue to do well. It has obviously or certainly corrected from its recent highs. The investors bought it at a price from where he's incurring some losses, but I don't think he should be worried about it. Just give it some time and I'm sure it will give him good returns. And as far as the other stock, Crompton Consumer is concerned, again, a good quality company. I remain bullish on these kind of stocks, and I think this stock also would do well. So again, hold on, even Crompton Consumers.
Okay. On that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with your stock-related queries after this break.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
Although difficult to predict, return will be more than 10 lakh.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty Bank Index is
buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here on ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When
You are India's most experienced market anchor. You don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long haul FII, who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action.
And get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
Stay safe, have a bright Diwali and spend quality time with your family and friends. So here's wishing you and your family a very happy Diwali from myself, Cheryl D'Souza, and the entire ET Now family. Welcome back. You're watching Buy Now Sell Now on ET Now, and we will continue to take your queries till the end of the show. So please do stay tuned. Let me take this next query that I have from Ramachandran. Before I take Ramachandran's query, Manish Raju had asked about IndusInd Bank, and we already asked that query to Kunal earlier on in the show, and he did say that he is positive on IndusInd Bank. You can look to accumulate this particular counter on dips. From Ramachandran, the question is on Dhansheri Ventures. He wants to have a fundamental view on this one. He's looking to buy the shares, but he wants to know whether it's a good investment or no. What's your take on this one? Vikas, do you track Dhansheri Ventures?
I do not, unfortunately, track this company and would not be able to offer my comment on the same.
Kunal, by any chance, have you looked at the charts of Dhansheri Ventures?
No, not really. Cheryl won't be able to recommend.
No problem. Vinny?
Okay, let's move on then to the next query we have, and this one is coming in from Ghosh Dada from Delhi. This one is on Acrosel India, and Vikas, you know, he wants to know about is this a great stock to hold? As of now, they've not given a buy price, but yes, they're making a bit of a loss on this one. So, would you advise on holding this one then?
Yeah, Vinny, again, a very good quality company. It's into kitchen sinks, and it's one of the leading companies there in building material segment. I remain bullish on the stock. The stock has also corrected from its highs and trades at reasonable levels. And I think from here on, we could see a smart rally in the stock in the next 6 to 9 months. So I remain bullish on this. And there are some marquee investors also invested in this stock. So no need to worry as such. And even if the investor is sitting on some losses, I think he or she should continue to hold on to this stock.
Hi, this next one is coming in from Soumitra Joshi, and Soumitra is saying that he had bought HDFC AMC at lower levels with a target of about 2,000 rupees per share, which was almost reached. But with Nippon's results coming out, what is the view on the sector and HDFC AMC in general with regards to his, because he's already holding the shares? What's your take on this one, Vikas? How does HDFC AMC look to you? Do you think that it is worth an investment to hold for Soumitra, because he's already holding it at lower levels, but he wants to know for how long?
No, again, Cheryl, a great company to own from a long-term point of view. It's the leader in the mutual fund industry today. And with the kind of interest which we are witnessing from retail investors in the mutual fund industry, I think these stocks would continue to do well. And this being the leader of the pack, I think there's no doubt about it that the performance would continue to improve. And the stock has also corrected from its highs and trades at reasonable levels. I think at the current levels, one should surely hold this stock and give some time. I think it should be looked at from a long-term point of view. One should need to give it at least a year, 2 years time, and then I'm sure the investor will get very good substantial returns from here on also.
Kunal, this next query is coming in on BHEL and L&T Finance, and this one is from Chandramouli B from Chennai. They're holding 70,000 shares of BHEL at an average price of 66 rupees per share and 35,000 shares of L&T Finance at an average price of 84 rupees per share. So, what is your near-term target? They're asking if that would reach somewhere around the 100 rupees mark, and should they continue to hold this?
So BHL, I think over the last few days I've been highlighting that 74, 75-ish is where I would expect as a short-term trading range for the stock price. It's currently at 66, 67 for BHEL. So you can expect possibly another 10%, 12% kind of an uptick from current levels. I'm not sure the much higher targets from beyond those levels. But then if the stock gains on high momentum as well as volumes like what we saw I think 2 days back for BHEL, then that could be a strong indication that you may be looking at a change of a big trend for BHEL, and in that regards then we can probably look out for more higher targets for the stock. But then we look out for such kind of patterns and take it step by step. As of now 74, 75 could be an immediate target for BHEL. For L&T Finance, I think it's a bit disappointing because the stock has got a lot many good starts, but then it's not converted majority of the starts into any major kind of a breakout for itself. So, like for example, the stock started to rally off in the month of March, April from 60 levels to almost 88, 90 at one point of time. But it failed to cross over those 3-digit mark for itself. Even the recent June lows, the stock had done pretty well from 65 levels to 85, 86 is where the stock had rallied towards. But then it failed to cross over the previous high. So it's been showing a lot of potential and strength, but unable to break past above the major highs. So you can ideally look out for a short-term trading play for L&T Finance. And unless the stock breaks past above 90, my views would be a bit more moderate for the stock over the near term.
All right, this next one is coming in from K. Ravi Kumar. He's writing to us from Vijayawada and he wants to know about Equitas Small Finance Bank, Kunal. 500 shares purchased at about 33 rupees per share. He wants to know, should he hold on to it or look to book profits?
So I think you can continue to hold on. I would also probably suggest that, maybe book out 50% of your profits over here. The stock is now testing its 50-day moving average. So assuming if the stock takes support over here, then you can expect a bounce to come back again and possibly the stock breaking the last 2-week or fortnight high, which is around 52, 51 mark for Equitas Small Finance. But on the other hand, if in case the stock breaks below this 50 DMA decisively, then it could probably fall back towards the levels of 44, 43 over the very near term. So I would suggest that it's much better in such scenarios that you book out 50% profits, and whichever way the stock balances out, that should be your next step which you should be taking.
The next query we have is coming in from Sushil Kumar from Trichy, and because this one is for you, they want the outlook coming in on Sun TV, which they bought at 560 rupees a year ago, as well as IOC, which they bought at 74 rupees 6 months ago. So should they continue to hold these stocks or exit or add? What would your suggestion be here?
Yeah, Vinny, as far as Sun TV is concerned, I think one can continue to hold on to the stock at the current levels. From a valuation perspective, the stock looks cheap and fundamentals are also good. So hold on Sun TV. And as far as IOC is concerned, these oil marketing companies have not been able to generate good returns for investors, be it long-term or be it even short-term investors. They could be trading plays depending on the vagaries of crude prices. So I do not recommend holding on to those kind of stock when you have so many opportunities elsewhere in the market. So I would advise the investor to exit on rallies in this stock.
This next query that I have is coming in from Tansen. Tansen is writing to us from Kochi. He's holding Dilip Bilcon, 190 shares at a price of 265 rupees per share. He wants to know whether he should look to average at current market price or no. Kunal, what's your take on Dilip Bilcon?
Well, I would not suggest to average at current levels. In fact, the stock has been a disappointment, at least in the last 8 to 9 months. There have been periods of bounces or rallies into the stock price, but again, those bounces have been sold into, and time and again, in that time span, the stock has been making new lows for itself. A much better alternative, which I would probably recommend, even though it's a bit higher beta as compared to Dilip Bilkon, would be IRB Infra. That stock is looking very attractive on the charts. I think recently, just about last week or so, the stock had broken past above its 200 DMA on the back of some very strong volume candles for itself. That generally indicates that potentially the stock could rally back towards 250, 260 levels over the near to medium term. So that could be a better alternative, which I would suggest.
Because the next query we have is coming in on Polyplex and IEX. Now the viewer is holding 80 shares of Polyplex at 2055, while 80 shares at a price of 2055, while IEX is 1000 shares at an average price of 200 rupees per share. Should they continue to hold this for the long term?
Again, I sympathize with the investor. He's bought both the stocks at very high levels and sitting on huge losses. Both the companies are quality companies, but they are going through their own problems. As far as Polyplex is concerned, the sector is reeling under the pressure, international pressures there. They have a lot of plants in several other countries, and they're not doing well. So, but it's a great company. It's only one of the very few companies in our markets which pays dividend every quarter. The results for the previous quarter has been good. But going ahead, they may not be as good because of their international exposure. But I'm sure if one has a long-term point of view, one should continue to hold on to the stock. From here on, he or she would get substantial upside from the current levels. So I maintain a hold on Polyplex. As far as IEX is concerned, again, a great stock which has created humongous wealth for long-term investors over the last 2 years. But over the last 6 months, it's not performed exactly. But from the current levels, I think there's not much downside, and one can hold on to the stock also at the current levels. And I see this stock going up to at least 175 to 200 rupees over the next 1 year or so.
I have a query from Sudarshan, and Sudarshan actually had written to us yesterday as well. Couldn't take this one. He wants on Piramal Pharma. He wants to know whether it can be average at lower price or he needs to sell it when it rises higher. What's your take on this one? This just got delisted. It got listed yesterday. It hit a lower circuit. What's the prospect from here on for this one? Because if somebody is already holding on to it, do you think it makes sense for that person to exit or hold on?
No, Cheryl, I think one should continue to hold on to Piramal Pharma. It's been a disappointment in the sense when the demerger happened, then people were talking about a very good listing for the Piramal Pharma, but the timing has not been good, and pharma stocks are not right now in the flavor. But at 180 odd levels, the valuations look pretty attractive. It's a good company with pretty solid fundamentals. I think one would do well to hold on to the stock at the current levels, and I think we should see upside to levels of 225, 250 over the next 1 year or so.
Okay. Kunal, this next query we have is coming in for Persistent System. This one is from Rajesh Wadhwani from Surat. And they're holding 30 shares at a price of around 3,175 rupees per share. Should they hold or exit at the current price?
See, I would suggest to hold on to the stock. Now, there are a lot of, different opinions on the fundamental side for IT stocks. But then, on the charts, when I look at it, so for example, over the last 5 months, Persistent Systems have been, retesting the levels of 3,100. I think 3110, 3120 has been the low for Persistent in the last 5 months, and there were, I think, almost 3 or 4 major tests towards, this kind of a level for the stock price. But it's managed to hold on to those levels and bounced back again quite sharply. So I believe that that's a sign that this could be a strong demand zone. Your purchase price is also at the much lower end of this price trend for Persistent, so that makes the risk reward also very attractive. So I would suggest to hold on.
Right, this one is coming from Sagar. This one is for you, Kunal. Technical view on Adani Enterprises. He's saying he's bought for a swing trade of at around 3,190 rupees per share. He's saying as the risk was minimum, but now he wants to know, can 3,500 plus be achieved in the short term for Adani Enterprises?
See, it's going to be a bit tough because at least as of now, looking at the last 3 days of chart patterns, the indicators, both the MACD, RSI, etc., they are still trading at a much lower territory. And when they are generally trading at a much lower territory, we expect that the stock lacks a lot of momentum. And Adani Enterprises and Adani group of stocks, they generally thrive on momentum. If these stocks, they manage to get into a good price action, then they generally see a strong follow through up move for themselves. But if these stocks, they tend to consolidate, then the consolidation is also prolonged for these names. As of now, it's the latter which is happening for Adani group of stocks. You can look to hold on to your trading positions over here, since the risk reward for your entry is quite attractive. But then as I said, that looking at the last 3 or 4 days of charts, I would expect that possibly for the next 3 or 4 days the stock may remain a bit more sideways.
All right, with that, we'll actually slip into a break on this edition of Buy Now, Sell Now. We will be back with your queries, but before that, just take a look at Canara Bank numbers flashing on the bottom of your screen. On the surface, as of now, we've got only numbers from agencies. The gross NPAs have improved on a quarter-on-quarter basis, as well as net NPAs. More on that on the other side, but don't go anywhere.
So I have felt that for the last 25 years कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader.